Welcome to Friday Takeaway. This week I analysed two makers and distributors of luxury cars, Sime Darby Berhad and Cycle and Carriage Bintang Berhad. But first, Abu Dhabi's IPIC, aka the International Petroleum Investment Company, has sued Goldman Sachs over 1MDB, alleging that it bribed its officials in a massive global conspiracy. IPIC, one of the world's largest sovereign wealth funds, filed a lawsuit in New York this week, seeking unspecified damages from Goldman's and several individuals, including Goldman's former Southeast Asia chairman Tim Leissner. IPIC said in its lawsuit that Goldman's bribed Khadim Al-Kubaisi, IPIC's former managing director, and Mohammed Al-Husseini, who was the CEO of ABBA, an IPIC subsidiary, inducing them to act against IPIC's interests as part of a massive international conspiracy to embezzle billions of dollars from 1MDB. Carlos Ghosn, the 64-year-old Lebanese, Brazilian, French auto executive, credited with successfully creating a partnership between the Japanese carmaker Nissan and its French equivalent Renault, has been arrested for alleged financial misconduct. Nissan alleges that Ghosn underreported his financial compensation and personally used company assets. Shares of both Nissan and Renault tanked on the news. In Japan, Nissan shares dipped, losing some 5% since Ghosn's arrest, while in France, Renault shares also sank, losing 11% in the same period. But the plot gets thicker. Apparently, Ghosn was planning a merger between Nissan and Renault, but it was a plan that Nissan was said to fiercely oppose, because Renault's 43% stake in Nissan gives it unusual levels of control with the ability to appoint senior executives, while Nissan's mere 15% on Renault comes with no voting rights and no control over its French counterpart. Back home, the government's plan to separate the powers of the public prosecutor and the Attorney General has been put on hold. Prime Minister Tun Dr. Mahathir Mohamad says this is because it involves amending the federal constitution, which requires a two-thirds majority in parliament. Pakatan has only got 117 MPs in the Dewan Rakyat, 31 short of the two-thirds majority. Still, critics have said that there is too much concentration of powers within the hands of the AG, and the two roles must be split to avoid conflict of interest soon. In this week's This or That, I look at two listed luxury automakers, Sime Darby and Cycle and Carriage Bintang. One is a regional automotive and industrial powerhouse with brands that include BMW and Mini. The other is a pure-play Malaysia-focused distributor of Mercedes-Benz cars. While sales of both are doing well despite a weaker economy, one is doing better than the other. So let's look closer. Sime Darby is a 16 billion ringgit mishmash of automotive, industrial and healthcare assets left over from a restructuring that once also housed palm oil and property businesses. In this current incarnation, Sime is still a giant with over 20,000 employees and operations in 18 countries. But its largest revenue contributor is automotive, under which it makes, sells and markets 31 brands in 9 Asian countries, including BMW, Mini, Land Rover and Rolls-Royces. Sime Darby's motor division, which accounted for 62% of first quarter revenue, had an 8% top-line boost in this quarter thanks to higher sales volumes here and in China. Sales in Malaysia grew 35% thanks to the zero-rated GST period between June and August, while a model rollout plan that also includes the new 3 Series ensures a steady stream of fresh car orders going forward. But the real highlight for Sime is its diversified business lineup, with earnings from its industrial division gaining 118% year-on-year, thanks to higher equipment deliveries to the mining sector in Australia. Plus, its recent purchase of industrial equipment provider Heavy Maintenance Group for 172 million ringgit is a useful strategy to capitalise on the rebound in Australia's mining sector. Stronger car sales and top-line growth does not always equate to bottom-line expansion. In spite of its higher sales performance, core pre-tax profit in its motor division still fell 23% in the first quarter, due to margin pressure on the back of competitive discounting, especially in North Asia and Southeast Asia. Of the 16 analysts covering Sime Darby, only 1 is a reduce, 8 are a hold, 6 are a buy, and 1 a strong buy. Sime Darby shares have been very resilient compared to its GLC peers. They're up 32% in the past 12 months and trades at a healthy 28 times earnings, and this past month, they're up nearly 2%. Unlike Sime, which is a regional hodgepodge of assets that also includes a large car business, Cycle and Carriage Bintang is solely focused on Malaysia with 13 outlets, giving it the largest dealer network of Mercedes-Benz cars in the country. But on a larger basis, CCB is part of the Singapore-listed Jardine Cycle and Carriage Group, itself a part of Jardine Matheson, through which it has a strong regional automotive presence with 250,000 workforce across Indonesia, Singapore, Malaysia, Myanmar, Thailand and Vietnam. While latest quarter revenue and profits are up, it seems that the outlook for luxury motors has cooled somewhat, with management indicating that consumer sentiment remains cautious, competition for buyers is stiff, and the cost of attracting customers remains high. There is also a discernible shift, so they say, to the lower margin E, GLC and GLA models. Cycle and Carriage have continued to invest in customer service, whilst there is also a fear that its sales network may restrain margins due to competition. Analysts say future profits should still improve though, due to their investments in the customer ownership and buying experience. Plus, the model lineup for Mercedes remains exciting and dynamic, as shown by the recent launches of the flagship and high-performing Mercedes-AMG G63, GLC 63 and GLC 63 Coupe models. An extremely quiet stock, Cycle and Carriage Bintang has only got one analyst covering the stock, with a hold rating and a target price of 2 ringgit, which means that if you get some now, there's a chance to make about 15 cents on your return, for a roughly 8% gains, assuming the analysts are correct.